All right. Good evening, everyone. Thank you so much for joining the call. We'll be starting the webinar session right away and would just proceed. And as more people join the call, they will, like other people will join us as we proceed in the conversation. So we have a very distinguished, if I may say, speaker in our midst today. In person of Richard Smart, he's an expert in the fintech and compliance automation space. He's one of the top, or he at the moment he works as a senior business development manager or an enterprise accounts manager in one of the top fintech companies. Sorry, top identity verification and compliance automation companies in Nigeria and in the African ecosystem. He has been in the tech ecosystem for over 5 years now. Let's welcome Richard with our emojis. Thank you, Richard, for honoring our
Thank
invitation, and it's great to have you here.
yeah, thank you so much, Adequaja. It's a pleasure to be here once again. Thank you so much, everyone, for joining.
All right, all right. So, um, the topic of the webinar session this evening is beyond transactions, how African startups can become strategic partners to banks. Now, if you've been in the startup or tech ecosystem for a while, you know that one of the biggest ways to achieve your revenue targets or meet or like grow or scale is by having a bank as your partner or as a customer, right? However, for many of us that work in partnerships or many of us that work in business development, sales, or account management, it is often difficult to work with these banks. Now, many of these banks believe that the tech companies, the fintech companies, they see us as competitors. Some of them believe that we are not compliant enough. Some also believe that we do not have as much expertise to deal with the volume of transactions that they have on their platforms or in the bank. So that's why it is pertinent that we have this conversation. And I believe there is no better person than Richard Smart, who has been in the industry for a while, and he primarily works with many banks in Nigeria. He has signed up Access Bank, Union Bank, Fidelity, Zenith, so many banks in the Nigerian um, financial services ecosystem, and he has built a relationship with them over the years. So let's jump right into it. My first question is this here. Why do African banks and startups often see each other as competitors rather than collaborators? And how can we shift this mindset?
Okay, thank you so much once again, Adequaja. I think one thing that I really love to address right now is the fact that there are so many founders today that have the mindset of, oh, our solution will disrupt the market. Our solution will disrupt the banks. Our solution is a game changer. Of course, we understand the innovation, we understand uh, the idea and everything that you have to offer. But the reality is that a bank is actually playing a very distinct role in the African market, not only in the Nigerian market, in the African market. As a matter of fact, that brings me to my recent research, and I discovered that in 2024, the commercial bank itself has a total assets of approximately 16.4% of the entire country's GDP. I think as for last year, we just have about 500 billion dollars in GDP for last year, right? So this actually indicates that the commercial bank itself controls about 16.4% of the Nigerian economy. And my recent research also reveals that the fintech just roughly between 1.25 to 1.5% of the entire GDP of the country. So you can see the gap. And most times, founders have the mindset that they want to come to the markets with their solution and disrupt everything, stop everybody from using the traditional banks. I mean, the traditional banks have been in existence even before some of us were born. The likes of First Bank, the likes of Union Bank, have been in existence over 100 years. And these guys have taken time to build reputation, they've taken time to build trust within the ecosystem. So fintech need to understand this, right? And why some banks are actually seeing the fintechs as competitors, answer your question, is that one, I usually consider three things before I consider you as a competitor. Is either our services are overlapping, that means we are offering the same service to the market, or again, after that, we have the same customer, literally, right? We have the same customers. And there is this fight between who gets what share in the market. That means in terms of revenue protection. So everybody wants to protect their revenue. So whoever, if we are both having the same service, we're having the same customer, we're having almost everybody, two of us will be fighting for a particular market share, right? We want to have the big rig, we want to have the big revenue in the market. So hence the reason why traditional banks are saying the fintech, because I mean you literally have offer the same service. But again, this mindset needs to shift, because fintechs on the other hand are thinking that they want to sweep the traditional banks off the market. But this have to change from just competition to collaboration. Now, see it this way: a lion in the jungle have gone for hunting and gotten himself a spoil. So then you see, I don't know if most majority of us have seen a documentary about hyenas collecting the spoil of a lion. So that's the way the market is, right? And then you see lion or devouring the spoils, eating, and then the hyenas will just come around. So in this scenario, the fintechs are the hyenas, right? So they are competing for the same food. The lion itself has the strength, but the hyenas itself, they also have the strength, but not as much as that of the lion. But majority of them two of them want to have the same food, right? So, but again, let the mindset shift from competition to collaboration. There's so much to leverage on. The big guys, the traditional banks, they have the resources, they have the customer base, they have the everything that you can ever think of. But there are pain points, there are challenges that these commercial banks are currently having that the fintechs can actually leverage on. Make your research, identify what these challenges are, and then begin to solve it for them. You see the big guys like the Flutter, what they're currently doing. Big guys like the Paystack, what they're currently doing, right? So they've been able to understand what the traditional banks are not doing currently, and they've been able to support the commercial banks in achieving the service, right? So at the end of the day, is the users, the customers like you and I, that gets to enjoy it. They want to make life easy for customers. So the fintechs also, I mean, the startups need to also understand that the users need to have a very smooth journey. They need to have a clear path to enjoying the service. So that's why the fintech also needs to come in this part, or the startup needs to come in this aspect and just make sure that the users are enjoying the service. I mean, it's all about financial inclusion, right? Or it's all about making life easy for everyone. So that's where this mindset needs really to shift from competition mindset to collaboration. The African banks and startup needs each other to drive financial inclusion, innovation, and as well as long-term growth. Yes. So I mean, basically, just to answer your question, so mindset needs to start changing from being competitors to more of collaboration to achieve one scalability, to achieve revenue, to achieve growth in all ramifications. I hope I'm able to answer your question, Adekoja.
Yes, yes, yes. Thank you so much. That's actually very profound. A lot of times in the ecosystem, when we see new companies or new founders come on board, and
Yeah.
then everybody starts to brand themselves as, oh, the next best thing, or
Mm,
we are disrupting the ecosystem.
yeah.
So it will be nice, or it will be better if the fintech companies or the startups come on board as collaborators and not competitors. That's actually very profound.
Yeah.
So my second question would be, now, in the ecosystem, we've seen quite a number of very, very succinct and good partnerships, right?
Yeah.
So partnerships, one that I can think of is the partnership between Wema Bank and some of the fintechs for virtual accounts, right? I
Yeah.
mean, partnership has been really, really great. It helps a lot of companies scale their payings and payouts, right?
Yeah.
Some
Yes.
people like Piggyvest as well. So, what are some of these examples of successful partnerships that you've seen between banks and startups in Africa? And what are the things that you believe made them work?
Okay. All right. So yeah, to answer your question, citing some example, as you've mentioned, Paystack basically. So if you check what Paystack is, Flutterwave is doing, or let me just start with Paystack, right? Paystack. I don't know if you guys have been in a particular e-commerce platform and you're about to check out, and the account that comes to you is Paystack Titan. You see Paystack Titan. So that's an example of the collaboration between Paystack and Titan Trust Bank. Titan Trust Bank has the license to hold money, that is to keep money in a particular form. But Paystack do not have the license to keep that money. So hence Paystack will have wallet system. So in that regard, with Paystack can hold money with the help of Titan Trust Bank. So you see that partnership. It's a partnership. So it's just basically an end-to-end integration that's taking place there, where Paystack can actually make Titan Trust Bank service available in form of wallet form. Do you see that? Do you see that partnership now? So now, apart from Paystack, we've seen the likes of Flutterwave. Flutterwave, I think Flutterwave usually send cross-border payments, and then you see Flutterwave is currently partnering with multiple banks across Nigeria, even Africa, to provide a seamless payment process solution across Africa. With likes of Flutter Send, you can actually from Nigeria send money to other countries in the world, UK and other countries in Africa. So you can see now that what Flutterwave just does is they collect the local currency, which is Naira, and then they've partnered with, I think Flutter Send, you can actually send to African countries, yes. So they partner with some local banks in Kenya, in South Africa. So which means that you can literally send Naira from Nigeria and then the beneficiary will receive it in Kenyan shillings. So you can see that partnership. They've partnered with a local bank, with the local banks in Africa. And then you've also seen the case of where I used to work before, Crasher, partnering with some IMTOs where IMTOs I'm trying to remember the name of this channel that we used to send Union, I think it's Western Union. Yeah, so they partner with clients of Western Union. They can collect hard currency and then do the payout. Just example you're citing earlier on the equation, then settle beneficiaries in Nigeria. So you can see that partnership. It's just basically creating a robust system, robust system for customers, creating a seamless journey for customers. Well, I've not really seen a provider just yet that can help you or that can enable you sending money from Nigeria to other parts of the world. It's not that there are none, there are actually, but it's not efficient yet. So these are other corridors which I feel fintechs need to also start exploring. Though there are a lot of certifications, there are a lot of licenses that are required in that aspect. So, but I mean, again, it now leaves the work for the fintechs to partner with with international bodies like the SWIFT, like the BREX, and just a couple of other international organizations that can help with cross-border payments, making it seamless, and also partner with liquidity partner. So these are other places where I feel the fintechs can also partner. So yeah, so going back to an example of the ones that I've worked. I've cited Paystack, I've cited Flutterwave, and there's one there's one particular service provider in Kenya that I've really loved their service so far, and that's the M-Pesa. So the M-Pesa again is like a PSB, payment service bank, and it's also partnering with local banks in Kenya so you see the likes of Safaricom, is also M-Pesa. I think Safaricom was acquired by M-Pesa or that way, right? I can't really figure out the picture here now, but Safaricom actually partnered with banks to link mobile money or to link mobile wallets with traditional bank services. So again, so you can see all those partnerships working, which also allow seamless mobile bank transfers as M-Pesa in Kenya. So you can see all this. So banks again gain access to millions of mobile first customers. Banks, it's just like is this the benefit is actually enormous. Is so huge because um as a business, there's no way you can reach all your customers all at once. But partnerships like this can help you reach customers that you were unable to reach. So that's the way it is. So just cites an example of partnership, this kind of partnership that we are talking about that has actually worked over time. So yes, I feel that the more before the more startups, fintechs, commercial banks, the more they start collaborating, the more there will be financial inclusion. There will be making things seamless, making operation, making financial what's it called again? Financial requests seamless, right? So yeah, just to narrow my answers to your question. So I've been able to just give you an example of partnerships that have really worked over the years. Yes.
That's very profound. In your question, you've already answered my next question. My next question was, in what other ways can these partnerships between banks and fintechs be
Mm,
explored, right?
mm,
So, in so far, we've seen that it's just payments and lending. That is the major aspect of partnerships. But
mm,
you mentioned INTOs, you mentioned liquidity partners, you
mm.
mentioned quite a number of other partnerships that we could explore in the ecosystem. So my
Yeah.
next question is, um, so if you are working in the partnerships or sales team of a
Yeah.
startup and you are talking to a bank. So, from the bank's perspective, what are the things you should consider that they are the biggest risks or concerns for them working with you? Because obviously, these banks would have some concerns like, okay, why should I work with these guys? So,
Yeah.
in your pitch to the bank,
Mm,
you should be able to handle those objections, right? So, what
yeah.
are those risks that you believe the bank would be thinking about in their head as objections to working with a startup?
Okay. I think there are quite a lot of them, a couple of them basically. So, well, I've not worked on a bank before, but there are a couple of lenses I can actually look through. So while startups offer innovation, offer agility, offer profound solution, but banks on the other end, their approach to partnership is they approach it with so much cautiousness. Yeah. Due to the various risks that is attached to it. One of the risks again is compliance. See, there's need to for me to also emphasize here, and for some of the startups to also understand, is that the commercial bank themselves, they are operating in a highly regulated market. So they they prioritize risk, they prioritize compliance beyond whatever solution that you're preferring. Your solution can be top notch, can be straight to the point, solving the problem. But if it is not complying to to the regulations, there might be a whole lot of difficulty there. So banks basically want a startup that complies with the necessary regulations. For example, the NDPR, which speaks to data protection. So those basic things, yeah, as a startup or as a fintech, you should be able to have that, so that you can use it to prove to them that your worries about me complying with with the appropriate regulation, your that let's just allay that fear. You have solved that problem. Then they want if they see that you're able to, comply with the necessary regulations that is involved in that particular service, then you've scaled that order. One of the other risk that banks also have in mind is most especially for startups that are providing service that are providing solutions via API, open banking, and everything. So these APIs are integrated to their core bank, to their core banking platform. So their core banking platform is where majority of their data sits. Yeah. So if they are integrating your solution to their core banking system, it must one, you must be able to prove that your service is not exposed to any form of data breach. Yeah. Because one of the things that banks also take to heart is they do not just, especially if you're offering API, they do not just give you access anyhow. One, they want to be sure that you are meeting the necessary cyber security parameters. So they want to be sure that your solution is not easily hacked by hackers. Because once your solution is hacked by hackers, they through that your platform they can have access to the core banking platform. So banks are always very careful about that. So those are things that I feel that as a startup you should also try to watch out and ensure that you are able to allay their fears. Another thing that banks also have in mind is that one is your solution um, operationally stable. See, are they are big in the market, and as well as they are big, they also have some big competitors as well. So they want a service, or they want a partner that is readily that whose service is stable. Service is stable. There's no failure. There's no downtime. Or even if there's going to be downtime, at least to the barest minimum. So they don't want surprises. They don't want sudden failure. So is your service stable? And I think I've come across that question several times in my conversation with banks. They won't be sure if your staff service is stable. As a matter of fact, they will ask this particular question that they always ask: what is the availability ratio, or what's the availability rate of your service? Right. So then again, it's good to tell them that, oh, the availability rate is 100% or 99.9%. But at the end of the day, once they onboard you and they see that your service is not reliable, they will yank you off immediately. Right. So another thing that banks also consider is also reputation. They protect their reputation a lot. If they are partnering with another startup that has been involved in cyber security issues, one fraud incident issues, and all that, they are careful to partner with you, because if anything should happen, they also face the fine. Why? Because they are partnering with you. So there are a whole lot of things that banks are looking out for. Again, you look about technology. Current banks in Nigeria, their system is like a legacy system. So it's all these archaic olden days. But it doesn't mean that it's not scalable. It is scalable, but they also want to understand that if your API that you're offering can be easily integrated to the already existing system, right? So those are areas that they look at. They look at the availability, they look at how reliable, how compliant, how compliant your service is, the technology, how easy to integrate with the already existing platform. And again, one of that thing is actually the scalability. I think I've actually talked about this scalability part. So yeah, so just to bring it up, just to wrap it up, basically, um, the couple of things that they look out for, and I think I've been able to address this.
All right, that's great. You answered like two of my questions. So in essence, right, what the banks are looking for
Hmm.
is your compliance,
Yeah,
your reputation in the industry, how stable your platform is. Once you
yes,
have those three things, you're good to go,
yeah,
right? So I believe with this, if you work in partnerships and you are here, you should be well equipped with your ammunition
yeah.
against the banks when they come up with the objections. So thank you very much for that, Richard. So my next question is this: how should startups approach banks for partnerships, and what is the right way to initiate and structure these discussions? Now, this is a question I've been looking like something I've been thinking about as well.
Hmm.
Now, because sometimes, when you are talking, banks are extremely large. Some of
Yeah.
them have over 2,000 employees, 3,000 employees. And
Hmm.
you are talking to one person, that person may not even be the right person. You can talk to like 10 people before you eventually find the right person,
Yeah.
right?
Yeah.
So how do you structure your approach when you want to partner with these banks?
Okay, so I think that's a very good question. I think one of the first things you should do is just basically do your homework. Your homework is try to understand. I think I said it earlier on. Try to understand the pain point. Yeah, understand the pain point of the customer, of the brand, of the bank itself, and then ensure that your solution or your service is appropriately solving that problem, is accurately solving that problem. So once you're able to identify the pain point, and your service is able to address their pain points, of course, the next step again is now to now bring yourself to their faces. Warmly introduce yourself. It could be at an event, it could be via email, it could be via referral, it could be via phone calls or any whatever form. Just bring your once you have successfully bring yourself to their faces, and then just introduce your solution. First of all, again, I keep saying this, that do not bring your solution first to their faces. Do not bring your solutions first to their face. Bring the problem to their face first, so that they will understand that, oh, you have a clear understanding of the problem. You have a clear understanding of the problem. And then once you have a clear understanding of the problem, then you are now going to bring your solution to their table. Now, I haven't identified the problem. These are the solutions. My service is this, is that, is that, is that. So with that, you have taken your first leg into the conversation or into the system. Yeah. So I think one of the things that we also need to understand is that, I think I mentioned it earlier on again, ensure that your service, your solution is compliant, is complying to the necessary regulations. I'm in the compliance part, servicing these banks with compliance automation. I understand that banks take compliance very, very seriously. Why? Because majority of them are being fined if there's any form of breach at all, be it data breach, be it one particular incident happen in terms of fraud and everything. There are fines coming left, right, center. So ensure that your solution is not a threat to the already existing system. So once you're able to identify that one too again, all you now need to do is, of course, with all your conversation, you have done your value proposition, you have done your necessary presentation to them, you have been able to meet them and have a wonderful meeting with them. One thing that I feel that some startups also fail to understand is creating a win-win solution, a win-win scenario. Win-win scenario could be, for the startup, I'm able to get the business from the company. Then for the bank, I'm offering you a cheaper, I'm offering you cost savings. I'm saving you costs. I'm offering you fine exposure. I'm reducing your fine exposure. Right. So you see that win-win conversation is very, very important. At the end of the day, the whole conversation is not about you as a startup. It's about the two parties creating a win-win conversation. It could be, this will even be about revenue, like I mentioned earlier on. So yeah, so once you're able to balance all these things, just know that the conversation still keeps going. The conversation still keeps going. So, but banks, one thing about banks is that their processes is quite slow, but understand that understand the complexity of the decisions, the whole lot of bureaucracies that goes on in the banking system. Understand the system, understand the flow, and then ensure that you're also flowing with the flow. If there's any word like that, you're flowing with the flow in terms of you're able to pick the conversation from the initial stage to the next stage. So once you're able to achieve that, you're gradually gaining your steps or gaining your way into the banking system. But at the end of the day, we all understand how the manager market works. Everybody have an interest to protect. Even in the banking sector, everybody has their interest to protect. But again, just know that whatever is yours is eventually going to be yours. You've done your bit, you've done your bit to identify the pain points, to be able to also prove that your solution is the best fit for that particular pain point and everything. So yeah, so just like that, that's where you're working your way into these partnerships.
All right. That's great. I was in a conversation with the CEO of one of the startups in Nigeria, and he was telling me about how there are three types of people you should focus on when you are selling to a bank, when you are selling to anybody, there is the user, there is the economic buyer, and
Yeah.
then there is the what was the last one? The user, the economic buyer, and there's the last one, Sha. So the user is the person who uses the product. That is the
Mm.
key decision maker. That's one of the key decision makers. Is the one who uses the product. The economic buyer is the person that signs off the product for you
Yeah.
to for them to like facilitate that purchase. And the third one is another one that I cannot remember now for the life of me. I really cannot remember it.
Yeah.
But anyway, that's something that is very very important to note
Yeah.
when you're going to the bank, so that you not end up selling to the wrong people. All
Yeah,
right.
I think to buttress what you just said now, um, it's very important that as your conversation is going on with as going with this bank, ensure that you're able to reach the decision makers. That
Mm,
journey can take a very long time. As a matter of fact, Union Bank today, sorry for mentioning name, but Union Bank today took me relatively about 6 months to be able to get to a point where um, the conversation now got to the CEO, as the person of Bumi. So you can see now that this conversation take a whole lot of time, but ensure that at the end of the day you're able to reach the decision makers, because that's where the whole thing sits. So once you're able to get to the decision makers, then just I mean, at the end of the day, it's just basically ensuring that your solution is the best fit. But again, the decision lies in their hand. So not all business you win, but for eventually the ones that will come to you eventually comes to you.
definitely. Thank you for that. My next question would be, so how can you ensure as a startup or as a fintech that you are not just a vendor partner, but an
Mm.
actual strategic collaborator in a bank's long-term vision? Because sometimes you see that the partnership with those banks may be short term. So
Yeah.
some banks just use some fintech partnerships as a band-aid,
Mm.
when they're able to get something that is better or something that suits their their own use or their own pain points. So
Mm.
how do you avoid that?
Okay, so I think your question is around how can startups ensure they are not just vendor partners, right? So,
Yes,
um,
yes.
so for this case here, I've come to discover that many startups fall into the trap of being seen as, I mean, temporary service providers rather than long term. You understand? So, but again, to break out the vendor kind of in quotes role and also become a key player in the bank's long term vision. There are a couple of things that I feel that the startup should also look into. And I think one of them is what I've also addressed earlier on. Make sure that your service your service solves a high priority problem and not just a product. Your service is not just a product and the peripheral in the face, but it's not solving a problem. So make sure that your service is solving a clear problem, that is a pinpoint. I'll cite an example. I remember sometimes last year, I think is it last year or 2 years ago, when central bank instructed all the commercial banks to revalidate the NIN across tier one, tier two, tier three bank accounts. So you see that problem. I can tell you for a fact that um, despite the fact that we have a lot of some vendors that are offering NIN's validation service, not all of them have that capacity to do bulk verification at the same time at once. So that now became a challenge for some banks. And as at the time we identified that problem, we started reaching out. I started reaching out. As a matter of fact, I started doing a couple of campaigns, email, reaching out to some banks. And lo and behold, I saw some interest from some banks. likes of Stambig, likes of what's the name again? Likes of FCMB, likes of trying to remember their names now. So they saw that our solution was not only just to validate NIN, was not only just to verify NIN, but they discovered that we could actually validate a bulk. I mean, when I mean bulk, I mean 1 million customers at a time. So that particular problem, I mean, the instructions that CBN gave to all the commercial banks was a problem, and that problem was a high priority problem. As a matter of fact, CBN gave them, I think, about 2 3 months to ensure they carry out this exercise, and we came through for quite a couple of them. You understand? And it's not really about the revenue for us, but it's about solving a problem, a high priority problem for the customer. So once your service is able to do that, trust me, commercial banks will want to do business with you. Another part is how usable how usable is your solution? Is your solution easy to integrate with? I can tell you this for a fact. Some commercial banks today have one of the most lazy. Sorry if there's anybody working in the bank here. Apologies for that. I don't. Okay, let me just say I don't mean what I'm saying, right? But just in quotes, yeah, we have some quite lazy IT people or dev guys. You could chase one particular person to to get on with an integration for like a month, and the person will not even respond to you, or the person will not even answer you. You understand? And that particular stage, you need to move past that stage. So what do you do in that case? Right. So what we've also done as a company is to ensure that our API documentation are simple, and the integration to our services are very simple, easy to use, easy to integrate, and then our platform are also easy to understand, right? So ensure that your solution is doing all this for the banks. Then also understand that your partnership with these banks, they are not short term. Have the mindset that this is supposed to be a long-term value, and it's also scalable long time. Because one of the things that we've come to understand is some, banks, they do large volumes. They do large volumes. So, and there are some platform or there are some services that once they see large volume like this, the availability or the service start dwindling. Understand? So ensure that your service can actually take volume, because banks, commercial banks, do what they do quite a large number of transactions. So your service should be able to meet up to that standard. And again, one very important thing, like I've always been hammering, your service or your solution is compliant enough, is complying with the necessary like regulations across board. So yeah, I think I'm able to answer your question, but if not, maybe I could just put some lights into some parts.
Yeah. You're able to answer the question. Thank you very much for that.
Mm,
My next question is, okay, you've answered this question actually. Some of the major pitfalls in the partnerships between banks and fintechs. So you
yeah,
could answer that in your previous response.
yeah.
So how do banks actually measure the success of these collaborations?
Sorry.
How do banks
Okay.
measure the success of the collaborations between startups and banks? How do they measure it?
Okay. So there are a lot of metrics that banks look into. Um, so I can just start by saying that I think banks assess startups partnership using some tangible business metrics. I think one of them is the revenue impact. So how is it impacting my revenue? So impacting my revenue in the sense that for me, that is offering a compliance related service. I'm making sure that my solution is reducing their fine exposure. I'm also ensuring that my solution is reducing their cost, right? So one way or the other, your solution should be impacting revenue. So how is your solution impacting my revenue? So how much have transactions grown since the integration with your service? So those are questions that banks like to ask. Is this startup enabling new product at all? I remember this our recent conversation with FCMB is now growing, gradually growing to a stage where whenever they are launching a new product, the first thing they think about is how is you verify going to help them to how is you verify going to help them to meet with necessary compliance related issues. How is you verify going to help them to meet with the regulations and all that. So yes, so you can see now that one way or the other we are impacting revenue. We are also helping them to release new products in terms of facial recognition, in terms of biometric verifications and all that. So we're able to impact revenue, help them to become up, create new products that we can also help them to ensure that they are meeting with necessary compliance regulations. So another thing is called, I think I mentioned cost savings, operational efficiencies, and how reliable is your solution. Couple of things. So how, like, any since the integration with your service, how available has it been? Has there always been downtime every time? Like on a yearly basis, one thing that I always expect from all the banks is they call it third party assessment. So they periodically carry out third party assessments. They want to see how this particular vendor has performed over the couple of years, over a period. They want to see how available have they been, how responsive have they been in resolving issues, and things like that. So they want to understand those are ways in which they're measuring the metrics of that relationship, the performance of that relationship. Another thing they also look at is how is this relationship helping them to acquire more customers? How is it helping them to also retain them? Things like that. So how is it helping them to simplify the onboarding processes for customers? How is it making life easy for them? You understand? So that's where they now look at the CSAT. They want to measure the CSAT, the customer satisfaction. So those things that they look into it. How is it reducing their risk and compliance enhancement? So how is it doing that? So all these things are actually measurable. They're actually measurable, right? So they look at all those things. They look at things like, for example, the speed of implementing, the speed of implementation and the scalability of your solution. So all these things, they look at it. There's a way they measure it from how they regularly engage your service. So they look at it. They look at it. So yeah. So I mean, those are just few metrics that some, not even some, majority of these banks actually look at, and that's why they conduct, like I said earlier on, that's why they conduct their annual or periodic third party assessment. So third party assessment, you just see the metrics. They will just see the metrics in an Excel format, and they're just giving you in percentage. You understand? So those are things that have been opportune to see in the metrics, the revenue, the scalability, the availability, the what's it called again? The response time, and how you are also reducing risk for them as a company, as a bank.
That's profound. So if you're able to keep up with all of those metrics, I believe you
Hmm.
should be able to sustain your partnership with a bank for a long term, right?
Yeah.
So my next question would be, if you at the moment you're in a
Hmm.
transactional relationship with a bank,
Hmm.
right, as a partner,
Hmm.
and it's just like a vendor to bank relationship. They don't really see you as a long-term partner. How can you transition to to being a strategic partner with that bank?
Okay, so ways in which you can be a strategic partner. Again, I think I can't but just overemphasize the how readily available your solution is. I can't just but overemphasize that. Your solution must be in a place where it's solving their pain point, it's solving their problem, and it is available and it is reliable, right? Because most times what they do is that the more they engage your solution, the more they engage your service. Now, engage your service could be in form of API call, it could be in form of coming to your dashboard and then engage and do the unnecessary things they need to do there. So how reliable or how efficient is it? So they perform these metrics, they perform this what's it called, this assessment, like I said earlier on, periodically. And then year upon year, if they are able to satisfy, if they are able to um, 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 conclude that yes, indeed, this solution has helped the bank in their customer onboarding process. It has also solved their compliance issue, and then you are ticking all the boxes. Before you know it, now you're already gaining ground in the bank. They are already knowing you. For example, I'll just cite an example again. I just recently I closed conversation with Providence Bank. Providence Bank, um, they started conversation with us last year, and it's even centered around bulk verification. So the bulk verification, that was at the time when Central Bank instructed all the commercial banks to perform NI validation for all their tiers. So once they concluded their bulk verification, they went off. It became something, it bothered me a lot when a customer used your solution. Apologies for that. When your customer use your solution and then they just churn. So it gives me a lot of worries, right? So what I've done was to continually engage and continually grow. What I mean grow is you're penetrating and then you're growing from one person to another person. It got to a point where I had to go and see the CTO.
Surex plus
Apologies.
234
Just give me a
7.
second. So apologies for that. I think okay, so apologies for that. It's one of my neighbors that is calling. Apologies for that. So
Yeah, that's fine. No problem.
yeah, so as I was saying, yeah, so I was able to secure a meeting with the CTO, and I had a one-on-one sit with him, and I was just trying to tell him what we can do a little bit more. And that conversation again generated again another form of interest, and he referred me to the business guys, those that does business verifications and the likes. And from there, Providence Bank Providence Bank saw another interest in our solution, which is the business verification solution. And that was how I was able to close the conversation around business verification. So again, apart from you just being able to penetrate, but make sure that you are how do I put this now? Make sure that you're just growing your wings within the bank, growing your wings within the organization. So once you're able to achieve that, right? Once you're able to achieve that, you see that whenever there's a need for your solution, you'll be the top of their mind. You'll be at top of their mind. And then solving the problem for Providence Bank again, I discovered that they started having some issues. What I just did was to just conduct a workshop for the entire bank. So we quickly did a virtual workshop. And with that, you're growing your wings within the bank. You understand? So from there, you realize that once you're able to survive the first year, the second year, you are going deeper. You're growing deeper. You're growing deeper. The fifth year, the bank is now familiar with your solution. Your bank is now so confident with your solution, and they are happy to renew their contract with you on a yearly basis. I hope I've been able to answer your question at the question.
Yes, 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 you have, you have. And it's actually been a very, very engaging conversation. That's all the questions I have. So I'll be opening it up to the audience or the participants if they have any other questions that's pertinent to the topic of discourse, how to navigate a long-term partnership between startups and banks. So does anyone have any questions in the audience? All right, I'll take that as a no. I guess we covered a lot of questions in the webinar session. So it has been a very engaging session and insightful session once again. Richard, thank you so much for honoring our invitation. And then we hope that um, we'll have more conversations like this down the line. And hopefully, we're able to also put all of these things we've learned today into execution in our various organizations, right? And for everyone on the call, this is just to remind you that the tech sales and partnerships community will be hosting their first, when I said there, the tech sales and partnerships community will be hosting our first ever um, conference, physical conference. It will be happening on the 19th of April at Go My Code Yaba. So for those of you who do not know about this, you know now. Please, can someone drop the link to registration and tickets in the chat box, right? Because I know there are some members of the community who are not. There are some people on this call who are not members of our community. Also, I would like you to follow us on all our socials, as well as join our Slack community. The links have been displayed in the chat box. So please and please, we'll be expecting you at the event. We have a great lineup of speakers um, coming for Techsales Con on the 19th of April once again. So please do not miss it. Just give me a second. Let me see if I can get the link for registration for the event. Oh, okay, thank you so much, Titi. So you can see the link. It's happening in about 3 weeks' time. So please do not miss it. It's happening on a Saturday as well. So please do not miss it, guys. Thank you all for joining the call once again. We'll see you all in the next webinar info session. Have a wonderful night, everyone. Bye, guys.
Yeah, thank you so much, Adequaja. Bye, everyone.
All right. Thank you.
Bye.